It's my last video interview of 2012, so I decided to bring Vince Lanci back on the show. We'll be getting his outlook for gold up next. Vince Lanci joins me now. Vince, always nice to see you.
Nice to see you again.
Vince, before we begin, tell me, how many emails did you receive post your manipulation piece?
13. I'm now 13 positive emails, about 116 emails that told me I should be hiding with John McAfee.
Okay, Vince, so let's get to our focus today, which is the outlook. And first we'll start by looking back at 2012, and then we'll get to what's most important, the future, and what 2013 may hold in store for the metals. But looking back over the year now, Vince, what would you say were some key moments for the metals market?
In terms of moments, there were many, but most of them grouped around the concept that I think is becoming prevalent in the markets now. The concept is that the markets are reacting more and more to what politicians and central bankers say, and less to earnings reports and fundamentals of the market. So, if I were to boil all these events down, I would say we are witnessing a different market, a market that is the most important trend from all these events is that we are in a centrally planned market now. The market structure reacts to what bankers and politicians say. And that's a disturbing trend. It can't go on forever, but there you have it. I mean, fundamentals don't matter yet. That's the trend that I think is the most important.
So fundamentals don't matter yet, but yet this whole time, everyone has been telling me they do.
Well, they do. If you were to look at the stock market, for example, as a boat, and you were to look at the anchor stock market as a boat, the price of a stock as a boat, and the anchor of the boat, its actual value, the rope is longer than it used to be between the anchor and the boat. And the boat is not pricing value, it's pricing expected value. And the market's being floated on central planning. And the governments are hoping that the fundamentals will catch up with the central planning, and then the need for the crutch will be pulled away. And I don't believe that happens. I think we need a market clearing event, and we'll probably have one in 2013.
Okay, so headed into 2013, you think we'll have a market clearing event? You say that with such confidence. How do you know?
Well, I don't know, but I think you're seeing the beginning of it now. I don't think the market clearing event will start in the U.S. I think Bernanke's got things under control, whether you like it or not. I don't think it will start in Europe. I think they will do what they have to do. I think the market clearing event is going to start in Asia. And I think it's going to start in Japan, and whether it spreads like a contagion here or not, I don't know. But I think it's starting. I think the inflation, debasing of currencies issue is going to start in Japan, and that's the beginning of your potential market clearing event.
So you mentioned Japan. Which other factors or issues should we be paying attention to in 2013?
Well, since the trend is towards central planning, central market planning, what we have to pay attention to is the success or how the market reacts to further central planning announcements, whether you have the bounce or the move that you have on positive news this year and how that translates into similar news next year. To be a little more specific, you have to look at the failure of central bank planning or government planning or the success. The failure would be a deflationary market. I believe Japan will test their success. Possible deflationary event, I give it a 30% possibility. Market clearing events starting in Japan, washing through the West. How the central banks handle that, if it happens, will be important. I think it will be much faster than last time, so I'm a little bit more worried about it. The other side of the coin that you have to focus on is, for the central bankers, the success. I think there's a very high probability that the global economy in general will recover, and the central bankers will prove themselves victorious in addressing this chapter in our financial managed markets.
Vince, it's interesting you mentioned central banks since I just interviewed Jim Rogers, and that was his pick for the most overrated and underrated player of the year in the markets.
Right. Too much credit, too much effect, not enough talent. Too much effect, not enough credit. That ties in with central planning, and that is a theme I think that people will keep saying to you one way or another. Central planning, central bankers, Ben Bernanke, et cetera, et cetera.
Okay, Vincent, we'll be getting to your picks for your most underrated and overrated players of the year. But before we get to that, the coveted gold forecast for 2013. Vince, what is your sentiment for gold as we head into the new year?
Well, where I stand is probably irrelevant. Prognosticators in gold, and I've done it, should just be quiet. The closest person I've heard to predicting the market is you. You said after my last interview, I think it's going to go to 1680. Now, why? Picking the price of gold is very difficult to do. And although I've tried to do it based on probability models, bottom line here is, and I'm not dodging your question, bottom line here is gold's a fiat currency too. It's based on emotion. I'm not saying it's not hard. I'm not saying it's not an asset. I'm not saying it doesn't have intrinsic value. I'm saying it can get frothy. It can get depressed. I think $2,000 in that area is not a problem next year. But if you have a deflationary event coming out of Japan, you're going to have a washout in everything. And gold might be the buy of the next 5 years. Stocks will be the buy of the next 5 years. So you want me to pick a price? If I say 5,000, you probably get more hits. So why don't I just say we will touch 2,500 in 2013. Where we end could be as low as 1,400.
Vince, well, you're right. No one knows the future, but thank you for giving me kudos for my price point for end of year 2012. I came awfully close. But, I'm just a journalist. I'm not an analyst. And when I made that price projection of a 1680, I just used my gut.
Right. But to just say that you're a journalist, no, you're a curator of other people's opinions. And from that, you come up with your own. Oh, but by the way, I was wrong on my last call, but my own CTA was up 8% for the year. So first year, I'm not going to cry too much.
So Vince, earlier in the year, you were calling for $2,000 gold. I'm going to have to call you out on it, but why should we focus on that? Because you were right so many other times throughout the year. So really, why should we focus on this, right?
Why should we focus on that? If I'm right in direction and timing. I'm never right in target. I think it's a fool's game. But I played into it because of the camera. I'm not gonna give a price target again.
But it is correct to say that you are bullish headed into 2013.
I'm gonna buy it again. If gold just goes down for no reason, I'm not gonna buy it like it just did. If gold goes down because of a macroeconomic event like Japan deflation, lack of China demand, spreading west, everything gets hammered. I will be buying some stocks, certain types of stocks, and I will be buying gold because these will be opportunities to buy because the central banks will not let this end in a deflationary bust. Bernanke will make it end in an inflationary not hyper, but an inflationary bubble.
All right, Vince, now it's your turn to pick the most overrated and underrated market influencers of 2012. Who are your picks?
Most overrated influencer of the year. If overrated means, sorry to act like a lawyer here, but if overrated means his day is done as someone the market's going to take seriously, then I would have to pick Ben Bernanke. If overrated means, the market pays too much attention to him and they will continue to do that, I'm going to say Ben Bernanke.
Okay, so Bernanke and most underrated?
I'm going to stay with the central banker, and here's why. I'm going to say Mario Draghi. I cannot believe that this guy stepped on the stage, an Italian, not a fiscally responsible country, and he said things, and the market reacted to him and listened to him. I'm unbelievably surprised. And in the face of German austerity measures, he had a positive influence on the euro. So I'm going to say Mario Draghi as an influencer on the market. And regardless of whether it's over or under, your influencers are now politicians and bankers. That's it. It's no longer Buffett. People don't take Buffett as seriously anymore. I mean, he's interviewing. He's writing his memoirs. He's setting up his legacy.
All right, Vince, on that note, what are you wishing for in the new year besides world peace?
Well, based on today's interview, a comb. Other than a portfolio that performs well, I need a brush. I need a hairbrush.
Vince, pretty sure I can hook you up with a comb. Happy holidays to you and all your loved ones.
Thank you. Happy holidays.
Thank you, Vince, and thank all of you for watching us throughout the whole year. We appreciate your support, your feedback, and your emails. Keep sending them to us at newsfeedback@kitco.com. I wish you a healthy and prosperous holiday season, and I look forward to seeing you in 2013.
Hi, it's Debbie Carlos with Kitco News, wishing you a happy and healthy holiday. Have a great 2013, and thanks for rating.
This is Alan Sakara. Merry Christmas, and we hope you have a golden new year.
Hi, this is Jim Wyckoff with Kitco News. Happy holidays and have a great new year.